Pictures now, though, for the business news. Hopefully, we're going to show you Wall Street ending a little bit lower overnight as higher yields weigh on tech shares. Financial stocks have been rising, though, but as you can see, they're down across the board just by a little bit of the close on Wall Street. In Asia, well, sentiment's getting a lift from data showing Chinese factory activity expanded at a faster than expected pace. But as you can see, despite that little lift from that, it's mostly down across the board, just that slight rise on the Kospi for you there in Seoul. Now, the International Monetary Fund is expecting to raise its forecast for global economic growth. The organisation, which will release its next forecast in a week's time, said the global recovery would accelerate thanks to strong expansion in the US and China, even though many European economies remain mired in a third wave of COVID-19 infections. The IMF's managing director said the outlook for the second half of the year was looking up.
Expectation is in the second half of the year, we would see the European economies on a sound recovery path. We do see the attention now being concentrated on accelerating vaccinations, and rightly so.
Now, the British food delivery firm Deliveroo is set to go public. The market debut is one of the biggest UK listings in years. As Ellen Gainsford reports, the company has profited from a pandemic-driven surge in demand for online takeout apps. But it's facing criticism, though, for its treatment of its drivers.
It's one of the few businesses that have prospered during the pandemic. Deliveroo is set to be London's largest stock market debut for a decade. The food delivery firm is preparing to go public, with shares priced at €4.50, valuing the group at €8.9 billion. But it's a lower offering than the company had initially hoped for.
Deliveroo has received very significant demand from institutions across the globe. Given volatile global market conditions for IPOs, Deliveroo is choosing to price responsibly within the initial range and at an entry point that maximises long-term value for our new institutional and retail investors.
Analysts say the lower valuation could be linked to mounting criticism over Deliveroo's treatment of its riders. Asset management firms Aviva Investors and Aberdeen Standard say they've decided against investing in the IPO, citing concerns over the business model. Earlier this March, the Spanish government ruled couriers should be treated as employees. Another gig economy employer, Uber, already reclassified its drivers in the UK after the Supreme Court ruled they were workers, not independent contractors. Despite its critics, Deliveroo has seen sales go up by around 120% over the last year, boosted by COVID lockdowns. Now 8 years old, the company has expanded to employ over 100,000 riders across 800 cities.